Phil, great to see you as always. What do you make of the fact that we have positive futures market this morning? Obviously, a lot of red across the screens now.
Yeah, Wilfred. So a lot of digesting of what's going on. I mean, if you would have told me 6 months ago, Wilfred, that the FOMC would be doubling their tapering pace and putting in 3 tightenings to next year, I mean, I would have thought you were crazy. I wouldn't have expected it. And I would have probably had an underweight to equities. We don't, okay? So you mentioned kind of the day-to-day volatility. That's expected. There are a couple of signals, though, that are really important for us. And the reason why we have the most equity in our portfolio today than at any other point this year. So let's start with the first piece on the Fed. Yes, at first blush, very, very hawkish. But if you look under the hood, what I keep telling people, they are coming from an absolute position of strength on both monetary policy and on the economy. On monetary policy, the 10-year note's at 140. Wilfred, it doesn't really matter what the federal funds rate does or the 2-year note. The 10-year note is what matters. Last time the Fed started tapering, rates were closer to 3% back in 2013. Okay. The second piece, of course, is going to be financial conditions, the consumer, the fundamental story. The Fed also upgraded their growth forecast for next year to 4%. That is double trend growth, double that at any point in the last cycle. So that fundamental story is still intact. The other thing, Wilfred, is the market already moved. So yesterday was really a validation of where the market already got to over the past couple of weeks. And then the last point, which I think is really important. Wilfred, I was on set with you in December of 2018 during the Fed meeting then, when all heck was breaking loose in the market. And the reason for that is because there was so much uncertainty about how long the Fed would eventually go. Not many people are talking about this, but through 2024, Wilfred, the Fed expects to be below their neutral rate. And again, if they're below their neutral rate, in their mind, they're still accommodated. You put all of that together, and yes, we're going to see day-to-day volatility, especially in the NASDAQ. And there are parts of the NASDAQ that are really junky companies. This is not really it's a FANG story today, but these FANG stocks are great companies. We hold them in our portfolio. This is just more of a rotation into the pro-cyclicality and into the value. But the growth story for us and the fundamental story still keep us overweight equity.